Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. There are more twists and turns in international trade to report. But first, in the US, the New York Empire Factory Survey came in positively in November on the back of a good rise in new orders. But they got a similar jump in November 2024, and this latest 2025 result is 7.5% lower than that. In Canada, their inflation rate dipped slightly in October to 2.2% from 2.4% in September, and far less than the 3% and rising inflation rate last reported in their southern neighbour. Canadian petrol prices fell sharply, and the steam seems to have gone out of their grocery prices. Meanwhile, foreign investors are finding Canadian securities attractive, raising their holdings sharply. They increased them by 31 billion Canadian dollars in September, an unusual spike for a month that usually attracts only modest levels. Canadians themselves are choosing local securities increasingly too, in a substantial out-of-cycle rise of their own. In China, there's increasing talk that the weekend's very soft economic data will bring rate cuts to their loan prime rates when they're next reviewed on Thursday. Even a cut in their reserve ratio requirements of banks. Both are currently at record low levels already. And in something of a positive surprise, Singapore's October non-oil exports rose sharply to 17.2 billion Singapore dollars, up more than 23% from year-ago levels, up 15% from September. That is up from a 7% rise in September. Their non-oil exports to Thailand rose a massive 91%. To Taiwan by a massive 61%, to South Korea by 38%. Going the other way, their exports to the US dropped by 12%, and to both China and Japan they were virtually unchanged. Indian exports fell almost 12% in October from a year ago, but Indian imports surged more than 16% in the same month. Indian exports to the US fell notably. That has resulted in a huge merchandise trade deficit blowout of $41.7 billion US dollars, and by far and away their largest trade deficit. Fortunately, they run trade surpluses for services, but even after that it was still a record $22 billion US dollar deficit and more than double year-ago levels. And we should note that aluminium prices, which are already very high, are likely to rise further on tight supply. Rio Tinto is adding surcharges on shipments to the US, where prices are globally elevated anyway due to tariffs, due to a supply shortage, and the need for Americans to have to pay to get the product. That cascades through to consumer prices and inflation. These cost increases will be particularly troublesome for US-made cars. The US Treasury 10-year yield is now at 4.13%, down 2 basis points from yesterday. And the price of gold will start today at $4,067 an ounce, down $14 from yesterday. And American oil prices have held from yesterday to be just over $60 a barrel, while the international Brent price is still just under $64.50 a barrel. And the Kiwi dollar is now just on 56.7 US cents and down 10 basis points from yesterday. Against the Aussie, we're up 20 basis points at 87.1 Australian cents. Against the euro, we're little change to 48.9 euro cents. That all means our trade-weighted index starts today at just over 61.3 and also little change from yesterday. And the Bitcoin price starts today at $93,684 and down 0.5% from yesterday. And it's now lower than year-ago levels. Volatility over the past 24 hours has been modest at just on plus or minus 1.5%. You can get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. Do this again tomorrow.